A very warm welcome to you. It's a pleasure to have you for company on this edition of the program Almond Finance and Wealth Reports. As you know, we are your source for latest happening information in the financial sector of the nation's economy. My name is Faith Wadi. On this edition of the program, we'll kick off by bringing you the continuation of our exclusive interview with Dr. Ralph Osayeme, a past president of the Chartered Institute of Bankers of Nigeria, CIBN, and the current executive chairman of GF Investment Group. I took him up on the impact of the current high exchange rates on the real sector and other sundry issues that are affecting the Nigerian economy at the moment. On Insurance 101 this week, our focus will be on insurance as a contract, why you should spend time to read your policy documents. We also continue with our series of special reports. This week, our focus will be on deepening insurance penetration, the micro-insurance option. Experts have suggested that taking the vast majority of Africans in general and Nigerians in particular from abject poverty, the best sure option still remains insurance. These are more what we have for you in the lineup this week, so I urge you as always to sit back, relax and spend this time with us, but all the details are coming to you after this break. Please stay with us.
The name is Jide Urimolade. I work in ICO Insurance PLC. I watch Almond Productions a lot. It tells you a lot about what is happening in the insurance industry, and it's a bright step in moving the industry forward.
Well, why is this so? Because you find in other clients, you can actually get a loan from a commercial bank at a single digit.
Yes, I agree. But it's a function of your own rate you pay for your deposits and what you're going to charge. For instance, deposit funds are gradually moving away from the banks. I hope you heard recently that federal government has moved away funds, agencies and government funds from the commercial banks to the vault of the central bank at zero interest rate to mop up liquidity so that inflation will not be high. But part of the inflation is being caused by government itself because, they spend on so many other things. But they can always do this by raising bonds or whatever. But if you don't have the kind of low price deposits in banks, there's no way you can lend at single digit. Take the time the central bank said, okay, they wanted a variance of probably 5% between the deposit rates and your lending rates. But unfortunately, within the intervening period, quite a lot of them ran almost short of deposits because of meeting liquidity ratios and other compliance and regulatory requirements. So to be able to do single digit will be possible. And that's why I think it's been particularly glad that government intervened in this way. But now your question is, to what extent are those, for which this program is designed, benefiting from it? That is what I told you. Many of them have not been used to those rigorous formalities for accessing loans. And they believe it's just for them to pick.
Okay. Okay, but oftentimes, I do also know that oftentimes funds like this is not the first time, funds like this, at the end of the day, the Nigerian factor will come in, and those who are supposed to access this fund don't even get around to accessing it. So that's talking about implementation of some of these things. So on this one, how do you think that is going to play out?
Yes, I agree with you totally. And that's why the central bank has very wisely set up committees at different levels, primary and secondary level, to monitor that the funds that are desired for small-scale industries are not cornered by the big sharks who they have their mouths open. If you can't take it, then I can pick it. But again, it depends on the efficiency of all these control mechanisms, both at secondary and primary level. And I believe that the Bank of Industry is doing very well in this direction, together with the central bank. Their monitoring system is very perfect. And so I don't think that something meant for small scale or for medium scale enterprises or for agriculture or for aviation can now be diverted. At the very worst, if these monies are not taken up, they are there again to be refinanced by other takers.
Okay, now another challenge that we see in the economy, and it has also been a very big problem, is that of unemployment. Now, a lot of people have said that we can only create employment, meaningful employment, by developing the real sector, which is your area of of play at the moment. Now, what do you see? Given your experience, what do you see as the challenge? Why even the real sector, they are not able to absorb as so many people as they should?
Yes, you can't give what you don't have. If you as an employer of labor have got your shoulders almost dented, your back is almost broken because of the interest rates you are paying, the repayment you are doing for bank, and quite a lot of other things like power supply, that you have to continue to finance generator upon generator, then you'll not be able to create stability for yourself, let alone create room for employing other people. But I think happily, most of the governments are now embracing this idea of entrepreneurship, whereby individuals can access some funds for them to start on their own business at low level. But for the organizations that have not perfected their acts, are not meeting their loan repayments, and have other things to grapple with, there are a lot of unsold inventories now. Most organizations are now, almost built up with unsold inventories. So there's no way you can then start employing more people. And that's why government in its own wisdom decided that, okay, let's create organizations for you. You too, you can become an employer of labor. And that's why you have so many schemes for youths, for market women, for cooperative societies, etc. And I think that is a wise decision in that direction. But overall, in future, employers of labor should be good organizations that can take on more. Because as a private entrepreneur, maybe you can employ 1 or 2 persons. But organizations as big as the big corporates can take thousands at a time. And I think that is the direction we should be going ultimately.
Okay, do you also see the part of our problem as that of industrialization? Because you find in some of these Asian countries, they can actually absorb a lot of people because their level of industrialization is quite high. But Nigeria is the reverse that we see here. Not so many industries, even the few ones that have been here before, they've been forced to leave our shores to go to other places that they have a better environment. I just want your thoughts on that.
Yes, industrialization is an ideal scene for a country like ours. But how do you thrive where, as a business person, as an entrepreneur, you have to virtually fund everything? I just talked to you about power supply. Most organizations today have to provide their borehole for water. If they need water all the time, they've got to provide the power supply. You have to make sure that you buy generators upon generators, and even have your
inverters
all over the place. And you have to create roads. You have to do. By the time you aggregate all this together, it may account to about 40% of your total cost of funding. Whereas the countries that you cited, I know that in Europe and America and in Asia, all these things are taken for granted. You just go there with your machines and you are producing. And that's why we can't be competitive. Another issue is that of importing all that is importable. Importing, like I mentioned before, toothpicks. Now you set up an industry. You think you are going to have an opportunity to continue to grow that industry. And suddenly you have importation of whatever it is. And then you can't compete because their own cost of production abroad is probably a fraction of what you are coping with there. Now for nationalism, yes. But most businessmen are not working on nationalism, yes. They're looking for their own profit to be able to survive, to be able to pay their loans. So until government can grapple with some of these bureaucracies and some of these other infrastructure to be in place, it will be difficult for us to act like the Asian tigers.
Okay, but doctor, this is a problem that you talked about, and it's an ongoing problem. We've been talking about this for years, and it does appear that those who should know, or government, they are not doing, or they are not listening, or they are not seeing the problems that those in the real sector or manufacturing sector are facing?
Yeah, I agree totally. And that's why when it comes to the real crunch, like we are now beginning to experience, and government now finds itself in a tight corner, where they have to do all those things that are required to be able to shape this economy. They have no choice, because people's appetite are now sharp. A lot of educated people are now roaming around. They are going to start asking questions. Why are we not getting it right? Why can South Africa get it right? Why can Ghana get it right? Why can Ivory Coast get it right? Why are we not getting it right, the giant of Africa? So I think the questions are going to be asked, the electors are going to be more inquisitive, and those in governance will now have to stand very firm to be able to recreate a new Nigeria where some of these things will have to be in place. And it's not too late. It's not too late. We've seen so many economies. You just mentioned the Asian tigers. They didn't have anything. They were heavily dependent on the American economy. And they went and then, did a lot of espionage, brought a lot of products. And now, if you see the foreign exchange reserve of countries like China, like Taiwan, amazing. But in our own case, we are compulsive demanders of foreign exchange, and even when we had sovereign wealth reserves, they're almost gone down now. So I believe that the new government, by the time they've settled down to business, are likely to now start to think of these new creativities.
Finally, I want to talk about some of the challenges that we also see with small and medium-scale businesses. Do you think that government has done or is doing enough to encourage those in that sector?
As a matter of fact, I think government has tried to provide loanable funds, like we referred to in our discussion, at a single-digit interest rate. But the dress alone doesn't make the monk. We talked again about infrastructure. A small-scale enterprise that is inundated with a lot of bills arising from power, from water, from tax, from whatever, will not be able to survive. And that's why most of the organizations that are surviving today are managing to stay afloat. And if things are not done properly, some of them might even start retrenching. And in fact, some will close shop, as we are beginning to witness. Because, for you to be managing to breathe, when you know that things around you really are not creating the kind of opportunities for you to thrive, then the only available choice is either to stay or to close shop. So the government, I believe, will have to address the issue of industrialization. Luckily, there's a blueprint on creating an industrial revolution. If we can follow all these things to the letter, and I must praise government in that direction, particularly the Minister for Trade and Industry, I think they've done a lot. We are presently consulting for an organization that is coming from Sweden, based on this automotive policy of government, and they were attracted. But you see, the point is that our policies cannot usually stand the test of time. And most foreigners will say, okay, this stop, go kind of thing. If these things can be made fairly stable for a while, investors will come. And we believe that this Swedish company will come into this country because they are so mesmerized by the new policy on the automotive industry. And it can go on and on in agriculture. The Ministry of Agriculture, they're doing wonderfully. I don't see why in another 5-10 years we'll be importing rice in this country. We should be net exporters of rice and quite a number of other consumables. Ofada rice is there, the Abakaliki rice is there. So
we don't want that.
And but the compulsive desire of parboiled rice from Thailand, from America, we are used to it, and even our mouths get that kind of taste. But by the time you find that it's going to be very difficult for you to bring American rice in or Thailand rice, then you'll be forced to take Nigerian rice. I attend some parties where quite a number of big shots now take the rice they call, I think it's Ofada. It's a delicacy. In fact, they now move aside and they say, it's Ofada rice I want to take. So in another 5-10 years, I think the story will be different, provided we can have a consistent policy that can generate that kind of confidence.
Okay, so between having a consistency in our policy decisions and the operating environment, power sector, high interest rates and all of that, which would you say is the most paramount for those who should know to focus energy on?
Yeah, I think it should be the enabling environment. If the enabling environment is right, the political environment, the political economic environment, and the general infrastructural environment, business will thrive. Businessmen want to put their mouth, where their money is, and their money where their mouth is. So in a way, if all these things are there, we call them the imperatives of business. If you have that, the infrastructure is right, the environment is right, and the financial plan of the company is okay, you will thrive.
Insurance contract. An insurance contract is a document representing the agreement between an insurance company and the insured. Central to any insurance contract is the insuring agreement, which specifies the risks that are covered, the limits of the policy, and the term of the policy. Additionally, all insurance contracts specify conditions which are requirements of the insured, such as paying premium or reporting a loss, limitations which specify the limits of the policy, such as the maximum amount that the insurance company will pay, exclusions which specify what is not covered by the contract. Obviously, the content of an insurance contract depends on the type of policy, what the insurance applicant wants, and how much he is willing to pay.
All right, welcome back. Moving on, we'll bring you our special report on deepening insurance penetration, the micro-insurance option. Experts have suggested that taking the vast majority of Nigerians from abject poverty, the sure best option still remains that of insurance. In a bid to achieve this, however, operators in the insurance industry in Nigeria must make insurance products and services accessible and affordable to low-income earners and rural dwellers.
The insurance industry contributes less than 1% to the nation's GDP. This is abysmally low given the size of our population. In a bid to deepen insurance penetration, especially on the African continent, underwriters and regulators are shifting focus to microinsurance. What is microinsurance? Microinsurance refers to insurance designed to protect underserved low-income people against specific perils in exchange for low premiums. The emphasis on low-income people stresses that premiums should be low yet proportionate to the likelihood and cost of the risk involved. Reaching the underserved means servicing low-income people through delivery channels that are typically compared to the traditional distribution of top-down social or commercial insurance schemes. The poor or low-income people are the focus of microinsurance. Poor people live and work in risky environments. As such, they are vulnerable to illness, accidental death and disability, loss of property due to theft or fire, agricultural losses, natural and man-made disasters. Not only can exposure to these risks result in financial losses, vulnerable households suffer more when a loss occurs. Experts believe that for microinsurance to work in Nigeria, operators must leverage on technology. Telecom operators are effective channels for the distribution of insurance policies. A classical example is the M-Pesa health insurance product, which was launched by Safaricom in Kenya. Reports show that 97% of Kenyans, or 38.8 million citizens, do not have access to health insurance. The Linda Jamii provides cover up to $3,400 for a premium of $140 a year. The aim of this microinsurance product by Safaricom in partnership with Britam is to reach out to the poor.
For an average Kenyan family, the cost of insurance is $1,000. The average salary, the average annual salary for a Kenyan is $750. Can you then wonder why it is that you don't have medical insurance? You're earning $750 a year and it's going to cost you $1,000 for medical insurance. So you know what? Let's just wait, and let's just, when someone falls sick, let's have a Harambee. So let's ask our friends and our families to club together to deal with it. Now, the problem with that is that people then don't go to seek medical care when they should do. They wait until it's too late. And usually, when it's too late is when they're about to die. When you are in hospital, the biggest worry, one of the reasons why you don't really want to go into hospital, is because your family are not going to have any money. You're being paid daily. And so we also give them 500 shillings, which is about $6 a day, so the family can continue to eat. Now, the great thing about this is you don't have to fill forms in, you can fill it from your mobile phone.
In Ghana, Tigo, in partnership with Bima and Microinsure, are also driving microinsurance and recording success. Tigo Family Care today provides insurance cover for nearly 1 million low-income clients, an estimated 93% of whom have no other conventional insurance cover. In Nigeria, Mansard, in collaboration with MTN, is pioneering the Yellow Life. It is an affordable airtime-based life insurance product. It is a simple and convenient way to access affordable life protection plan with your mobile phone and registered MTN number at 15 naira per day or 100 naira per week, with a benefit plan of up to 350,000 naira to cover medical expenses or permanent disability benefits in case of accident. While this partnership is commendable, issues of claims notification, verification and payment is far from perfect. It is, however, commendable that Mansard and SBN Life have taken the bold step in deploying technology to drive microinsurance. For a country with 60% of rural and urban poor, the government and stakeholders, not just in the insurance industry, must come together to develop microinsurance as a sure means of lifting people out of abject poverty.
Alright, that's all we have time for on this edition of the program. I do hope you thoroughly enjoyed it. Like I always say here, for comments, questions, observations, do feel free to get in touch with us on 017763981 or 08033357879, or better still, send us an email, almond4xx@yahoo.com or almondproduction@gmail.com. You can also visit us on our website, www.almondreports.com. Don't forget to like us on our Facebook page, Almond Finance and Wealth Reports, and view past episodes of this program on our YouTube channel, Almond Reports TV. Join us every Wednesday by 9:45 a.m. live on Niger FM 102.7 if you can, for our Pidgin English program called Waiting Insurance They Do Safe. My name is Faith Ugwode. Until same time, same station next week, when we'll come your way with a fresh package of this program from all of us here. It's goodbye.